Kango.
Hello everyone, let's have a look at this week's economic news. Thanks, I go.
Key points of this week. Oil prices go negative in history. After the oil price war between Russia and Saudi Arabia escalated in March, another huge shock came to the global oil markets this week. The May contract for American oil benchmark has turned negative. It was the first time an oil futures contract had traded negative in history, which means producers would be paying buyers to take oil off their hands. The reason for crude futures going into negative territory was the coronavirus pandemic depressing demand for fuel and not enough storage for the crude. West Texas Intermediate, WTI, for May delivery shed $55.9 to settle at minus $37.63 a barrel on the New York Mercantile Exchange on Monday, a decline of 306%. The price on the futures contract due June settled at nearly $20 per barrel. That gap between the two contracts was by far the biggest ever. The price of WTI crude went out from the negative territory, and closed higher on Tuesday at $10.01. WTI for June delivery dropped 43% to close at $11.57 per barrel. Stocks in Wall Street fell sharply for a second day on Tuesday, taking a cue from a further slide in oil futures. The Dow Jones Industrial Average was 2.67% or 631 points lower on the day. The S&P 500 and Nasdaq Composite ended 3.078% and 3.48%. U.S. stock indexes jumped on Thursday as oil prices turned positive again and the U.S. Congress passed the coronavirus aid bill. The Dow rose 475 points to 23,494 points. Nasdaq Composite and S&P 500 spiked 199 points and 58 points on the day. So this week, the Dow was down nearly 2%. The S&P 500 and Nasdaq fell 1.3% and 0.2%. Here's a roundup of Hong Kong economic news this week. Fitch Ratings has downgraded Hong Kong's long-term foreign currency issuer default rating, IDR, to AA- from AA. The outlook is stable. Fitch said, after prolonged social unrest in 2019, Hong Kong's economy is facing a second major shock from the emergence of the coronavirus pandemic in January. The downgrade also reflects Fitch's view that Hong Kong's gradual integration into China's A+/stable national governance system and economic, financial, and socio-political linkages. Hong Kong Monetary Authority has conducted 4 transactions so far, selling 7.7 billion Hong Kong dollars to the market in exchange for US dollar in 2 days this week, as rate gap widens. HKMA intervened, selling Hong Kong dollar for the first time in 4 years. Oil price slump and Fitch downgrades Hong Kong both hammered benchmarks in Hong Kong. The benchmark Hang Seng Index on Tuesday was lower below 24,000 points and stayed below the 10-day moving average. On Thursday the stocks added 83 points at nearly 24,000 and trading above the 20-day moving averages. Stock markets in Hong Kong ended lower on Friday, with the benchmark Hang Seng Index down 0.61% or 145 points to end at 23,831 points. Turnover totaled 82.799 billion Hong Kong dollars. HK stocks went down by 548 points for the week. The Hang Seng China Enterprises Smart Index dropped 0.49% at 9,656 points. Turnover totaled 22.261 billion Hong Kong dollars. Hang Seng China Affiliated Corporations Index slipped 0.7% lower to 3,700. It turnover totaled 4.856 billion Hong Kong dollars. On the mainland, Shanghai Stock Exchange Composite Index was 1.06% or 29 points lower at 2,441 points. Turnover totaled 244.122 billion Hong Kong dollars at the close of trading.
Thanks for watching. I will see you again next week. Bye bye.